G'day all, Ben here from East West. This is going to be part 3 of the Market Cipher B video series that I was doing. This is much delayed, of course. I sort of let this one go to the sidelines, but I've since revisited and I really want to just finish it off because I think it segues into possibly a new playlist for the channel. Nonetheless, what we're going to do here is we're going to go through the codes that we did write in part 1 and part 2. We'll just review those quickly, then we'll go through and I'll show you some of the advancements I've made for part 3, and also we'll run a few tests on some different things to see what we can come up with. So with all that being said, we've got to do something a little bit boring first, but nonetheless it is important, and that is of course some disclaimers. So obviously I don't think I have to mention this, but all strategies mentioned and the code produced, nothing here constitutes advice. You've got to do your own research whenever you're going to trade a strategy in any sort of market. So in terms of the data, I'm using a mix here of Tradingview data and YFinance data. Now obviously I can't guarantee that their data is accurate. However, I've got no reason to believe that it's not. But yeah, we've got to be careful here because when I compare results, different data sets can make big variations in any sort of backtest. So that is something that you should keep in mind. Now, the backtest results shown here are pretty basic. They're not meant to be exhaustive. They're sort of more indicative. So it's like this is a basic back test that gives us an indicative result that's sort of more educational in purpose. So I've made the code available to the public, but I obviously cannot take any responsibility for any errors in the code or any errors that the code provides. And I'm not going to guarantee any validity of results. So I've done my best. It's best endeavors here. Like I've done my best to code it as best I can, and I've got no reason to believe the results are bad, but I can't guarantee that, of course. So all the code and results are educational in nature, and they should be treated as such. And now this last point is very important. This is basically just educational. I'm not here to ridicule, discredit, or belittle anyone. Anyone's work. I'm not here to prove anyone right or wrong. I'm simply running a test on a strategy that's been presented, and I'm seeing if I can get backtest results to line up to what's being claimed. If they don't line up to what's being claimed, that is not me making any sort of claim to discredit a third party. I'm just showing you the process I'm going through with running the strategy that's been presented. I see a lot of strategies presented on the internet with a lot of lofty claims, and all I'm doing is putting that strategy to the test in an algorithmic fashion, which I'm trying to show very transparently. So now that all that's being said, let's get into some of the more fun bits. So just to go over where we finished at, this was the kind of plot that we finished up with in the first part. So this is a pretty basic plot using Plotly, but I think I did demonstrate that it was plotting correctly, and it was plotting as per VuManChu's indicator on Tradingview. In part 2, we ran a very basic test just to make sure that everything was working properly, and we did that with the Spider ETF on a daily basis. I just took that date, and I didn't quite finish this off, but I did get to the point down here where we sort of ran a very basic test, and we got I didn't print this out, but we got 14 trades out of this with 5 winners at a 35.71% win rate. So generally speaking, this was not a good system to trade on a daily basis, but of course I think I did mention that it was not meant for trading on a daily basis. It was more a short-term scalping type system. So I'm just going to move in here to some of the enhancements that have been made. So first off, I'm just going to start here with an example where we've taken data from Tradingview into a spreadsheet. Now, just for note, in future, what I'll do is I'll start actually downloading data directly from Tradingview rather than downloading into a spreadsheet, then importing the spreadsheet, because that's a little bit clunky. And we can actually grab the data from Tradingview itself. But more of that in a different video. I've just kept it simple here and done it the old way. Now, what's important to note here is one of the reasons why I've grabbed some data from Tradingview is I've just done a test on a bunch of futures contracts. Now, the futures contracts from YFinance are not great because they don't deal with the contract rollovers very well at all. and obviously in Tradingview we've got the option to adjust the contract for the rollovers. So it's not prevalent in every contract, but for things like the euro against the US dollar, or the Japanese yen against the US dollar, maybe things like oil, when they go into expiry, the price gets very, very bad and it's not very reliable. So YFinance doesn't deal with that, Tradingview does, which is why I've downloaded Tradingview data. Of course, you can use any data from any source you like. You just need to ensure that the data you are using is as accurate as can be, I think is just the main thing to note here. So all I've done here is I've just read a path. So I've just put your file path, because that's what you will have to do, put in the file path of your spreadsheet. I'm just going to use the Australian dollar futures here. I wonder why. And so what I've done here is I've just taken the column, because when I downloaded from Tradingview it came in Unix time, so this line of code simply converts it to a date time column that we can use, and we set the index. So I'm not going to go over all of the code, because that's not the purpose of what it says, but everything here is virtually the same as we have. All these trade rules are the same. Everything's the same. The only thing I've done here in the execution loop is just made a few little changes that just deals with markets that gap. So this is probably, it doesn't happen a lot, but it's more like if you get gaps over the weekend. Now, futures contracts, you don't get as big a gaps as in stocks, but obviously I want to test on stocks as well. So the stocks will have daily gaps in them. So what we need to take into account is if the market gaps through the profit line, then obviously we'll get filled better. And if it gaps through the stop line, that will obviously get filled worse. So we're just updating the code to reflect any recording of prices that are outside our profit and stop levels. So when we just come down here to the plotting, I've just brought in this. I've just cut the data frame down to size. So I'm just going to take the last 500 lines. Now the reason I'm doing that is because when we come up here, if you look at the data frame itself, there's 20,595 lines. That means when we plot it out, we would be asking Plotly to plot 20,000 bars, and it just really isn't up to that task. So what I've done is I've cut the data frame down to the last 500 bars, and that way we can plot it out without stressing out the computer too much, and we can just check visually to make sure that the trades are executing the way that we expect them to be executed as per the code, or the rules I should say. So the plotting code's grown a little bit more. I've just brought a little bit more in. I'm not going through it all. That's not the purpose here. But this is now what we're talking about when we're looking at the plot. So you can see this is a bit more upgraded. I've just made this a little bit more visually like the Tradingview indicator. I think the money flow there is just a little bit visually easier to look at. And I've also brought in the crosshairs. Now the other thing I've done is I've brought in, let me just zoom in here. I've brought in these lines. So that would be, this blue line here represents the entry, and that bar represents where we would have entered on. This is the profit, and this is the stop line, the red line here. So we can just line it up a little bit more. So let's just go to pan here, and if we move this across, actually I'll just resize this, and I'll just show you with Plotly. I've put a border around this. The reason being that if you just get into the border, you can click and drag it and sort of just resize it a little bit, which is kind of handy. You can do it in this corner, you can do it in that corner. Oh, you can do it in that corner. So in each corner, but you know, it's a little bit hard to see. But if we just get outside that border, that'll let us resize. Nonetheless, let's look at this example. So we are above the 200 MA. That's a tick. We've pulled back below the 50 EMA, tick, and we've had the positive cross with a positive money flow. So that was a legitimate trade. That looks like, to me, it's executed as per the way that the rules are written. 2 times the stop here, and a stop below the swing low, which was here. Okay, and obviously this trade got stopped out. Looks like we had another one here. So there's the cross, yep, and that got stopped out as well. So that was not a profitable trade. This is Aussie dollar futures, obviously. So when I just put it all together, I just actually took all the trades. So there were 365 trades done here, starting on the 19th of January, and this is all on an hourly basis, all basis Tradingview's data. We got a 34.8% win rate, and we actually had a negative P&L. Now, this looks funky, and the reason being is that the P&L here, because of the way that it's priced, this is like 6 points, 20.5 points, 22.5 points. So we were negative on the strategy in the Aussie dollar over that time. Again, I'm not making any comment about this. I'll just let you draw your own conclusions, but we'll just move on here. So this is the YFinance module, which I'll also, the codes, there's some subtle changes in various bits of the code, but I'll make both available depending on which sort of data you want to use. But like I said, I would not use futures data from YFinance. It will not work properly, I don't believe. So you'll need to source data. If you want to do it on futures, you'll need to source data from other sources. Nonetheless, I'm just going to use the Spider ETF here. So, I mean, I think for stocks, ETFs and stuff like that, it's fine. So we're just going to, the difference here is we've brought in date time here because when you are downloading an interval outside of daily, it will limit you to 730 days worth of data. So I'm just going to bring back 729 days. So we just got a day of slippage there. Bring in a start date and end date and just give it a time to download. That you don't need. Pardon me. Anyway, I'm not going to go through the code because, like I said, that's different. As we go through, there's some very slight differences, but they're pretty much all the same. The execution loop's the same. Sorry, pardon me. There's some stuff here you don't need. Don't worry, when I provide the code, it won't be there. This is all the same. We're just going to cut it down again. The plotting code's a little bit different in parts. And so something else I'll have to do is probably make this code a bit more compact with the plotting. But it'll do the same thing. Okay, so we end up at the same spot here. Okay. So now we're just on the hourly. Okay, so we're just looking at an hourly chart here of the Spider ETF. So let's see, looks like we got a long trade here that didn't work out. That one got stopped out. There's another one here. You can see that it's off this positive cross here. So that is, yep, that all looks correct to me at least. Whether or not you've got to be above the 50 EMA and that changes things, I don't know, which would kind of eliminate this trade. But that's not the way that I read the rules as they were presented. So anyway, if you're going to go along and follow this code, I would still suggest, and look, like I said, I've taken the last, if you come back up here, I've taken the last 500 lines. You could do any sort of split in here, so you could just take little segments of the code, but the reason I did go through the plotting is I reckon it's worth going back and just checking to make sure that the code is executing as per the rules. And see, here's a nice short one that we had. You can see here, this is where there was a gap. So we got a nice short trade off this one, and that would have been on this cross, negative money flow below the 200, pull back to the 50. You get the point. With that being said, these are all the trades. So we got 61 trades, and we started here on 22nd, 8/9. But we only got a win rate here of 36%, and the total P&L was, this is where the P&Ls can work a little bit differently for stocks. So if we just did one share every time we did this system, we would have lost $8.94. Also important to note here, there is no brokerage and there is no slippage built into these. That's why, this is a pretty basic back test, okay? But I think it's indicative of what's going on here. So now we're just going to move into testing this on a whole bunch of stuff, because we just don't want to do it on one, of course. We need to do it across a swathe of different things. So any good system should be robust across more than one contract. I don't think it's a good idea to use systems, just my opinion. I don't think it's a good idea to use systems where it's like, oh, well, it works in the Aussie, but it doesn't work in the Euro, but it works well on gold, but it doesn't work well on the S&P. I think if you've got something like that, you've got to be a little bit careful about going after that. Nonetheless, what we're going to do here is we're going to use some lists. So I'm going to start here. I've just made a few more little changes. So what I've done here is I've actually just, this is probably better coding, I've just defined some functions. So basically this is all doing the same stuff. It's just working out all the indicators that we need, and then we've got a function for running the trade loop, which is all the same. And now what we're going to do is we're going to make a list called file paths, and that is going to be, it's actually a dictionary. Okay, so it's going to be a dictionary with a key. So this is basically just going to be your spreadsheet path, but we're going to just attach a key to that. Okay, so as we come down here now, we're just going to run a loop here with we're going to say for code and file path in the file paths. So this will be the code. So we're just tagging each outcome. So we're just going to run through basically just applying everything to each contract, and then we're going to come up with the results. So that's for the spreadsheet. The YFinance I'll go through, but here we are, the results. Okay, so starting here with the Aussie dollar, pardon me, with the Aussie dollar on the 21st of 2021, 19th of January. We did 4,329 trades across all those contracts on an hourly basis. So when we come down here, we can see the results that we came with, just the win percentage. Okay, so you can see here that everything is not really super duper good. I came up with that's the total win percentage of everything. Now the problem with this, of course, is that this system is leaning on a 2-to-1 risk reward ratio. So basically, when you think about that, if you've got 10 trades, you need a 40% win rate to generate a profit, even before brokerage and any potential slippage. So when you think about that, if you've got 10 trades, if you win on 4 of them, obviously you get, say you're risking $1 to make 2, you make $8. And if you lose on the other 6, you're going to lose $6, so you'll have a net profit of $2. That's why I'd look at this and think, okay, well, if it hasn't got a win rate of at least 40%, I don't think it's quite what I'm looking for. Just my opinion. I'll let you be the judge of that. But also what we've got to consider is that not every trade is the same in terms of its size. So within these win and loss, winning and losing trades, there'd be a lot of different size profits and losses, obviously depending on how far away the swing low was. So that's got to be taken into account, because sometimes even working with a 2-to-1, you can have a profitable system with a win rate below 40%. Now I think this is more demonstrated in the stocks, so let's have a look at some of those. So I've just come back out here to comment out the spreadsheet part of it, and now we're just going to bring in the Yahoo Finance. So I'm going to use codes for the tech stocks. Now maybe that's unfair. Maybe you could use ETFs. Okay, but obviously with the tech stocks, the downloading here is slightly different. Okay, so yeah, I could build it all into one, but I thought it was just a bit easy to split it up. So what we're going to do is we're just going to do exactly the same thing, but for the tech stocks, and we'll see what we get. So I just need to restart and rerun this entire thing. Okay, so this is it's downloaded the first one, which is of course Apple. For some reason, just at the moment, my YFinance is just downloading, is just running very, very slow. So I'll just pause the video till it's all done. Okay, so now we've downloaded all 7 of our stocks, and we've got the results. So these are all the trades. So we've got 339 trades beginning back here, 22nd of August 2022. We can see here the win rates are a little bit better. They're a little bit better. The Apple not so good, but Meta here is okay, yeah, and Tesla itself is also okay. So let's have a look at these two individually and see what we can see here. Actually, as a aside, what I'm actually going to do is I'm going to look at we'll look at Apple as well, just to see what happened there, because that's the lowest win rate. But we'll see if it was actually profitable. So we'll look at Meta individually, Tesla, and Apple. So we're just starting off here with just double check what I did. Yeah, Meta. So we're just starting off here with Meta. So there's the chart. You can double check to make sure the system is working. Here's a good example. Okay, here's a good example of why I had to build in the gap, taking care of gaps, because here's the entry. Okay, so here's our entry signal. Okay, and we've entered the trade here. Here's the stop above the high, but the profit target was here, and look, we had a big gap down. So you would have been short this, of course, but we've had a big gap down. So we don't want to record the trade price here, because obviously we got filled better. We want to record the trade price here at the open, which is for $421.40, whereas this is $455. So we were short, so we got a better fill there. That's $30. You know, that makes a big difference at the end. So nonetheless, I digress. There's all the trades. So we got 39 trades, because of course the first line is 0. So we got 39 trades out of this thing. We were a 48.72% win rate, and if we had a trade of one share at a time, we made $100. Okay, so that's not too bad. I mean, really, when it comes down to it, in terms of trading systems, that's not too bad. That's not a bad result. You know, obviously, you've got to do position sizing and stuff like that, and sort of your money management. But this is just very bare bones. That's not too bad a result. So let's check the others. Okay, so this one's Tesla. All right, so in Tesla, what do we get here? We got 49 trades out of Tesla over the period from the 8th of August. Very lucky. So we got 49 trades. We had a 44.5% win rate, and we made $97 if we were trading one stock with no brokerage and no slippage. Okay, so that's not too bad either. I mean, that's when you're talking about a 2 to 1. If you're getting above 40%, you're likely to be profitable. Okay, so I haven't kicked over everything, you know, and I could definitely refine this down a fair bit more to explore a lot deeper into what's going on, to drill down a lot further. But what we're doing here is we're just setting up this basic test here to go, okay, well, is there something worth delving deeper into here? So far, you know, if we just go back to the list of stocks that we had, you know, so far these are not too bad. So let's look at Apple, because that one was the worst win rate. So let's see what's happening with that one. Okay, so here we are on Apple. So, you know, we can test the trades. This looks like a cracking one here, where we got the signal here. We had the green money flow. We got the entry, and that was a good one. But obviously there must have been some pretty poor ones along the way as well. I think something else that we haven't talked about is things like stock splits, and you know, there's a lot that goes into it. But we're just, like I said, we're just trying to do a bare bones, you know, just a simple system here. Now, this is something else I'll just point out. You'd be like, why isn't the cross on that one? Because this is the bar after the cross, which when you look back at the system is actually where the dots are plotted. They're not actually plotted on the cross. They're plotted one bar after the cross. So here's the cross. There's the next bar. Okay, so yeah, we came down here. We would have gone short here. We're looking for this, and we got stopped out. Okay, so you know, there's obviously bad trades here in Apple, and there must have been a few more back through the history. But like I said, you can slice the data frame up to check different times if you want to check some of these different trades. But this one had a win rate of only under 28%, and we actually lost $7.10 for each share traded without taking into account slippage and brokerage. So where does that leave us overall? Well, to sum up, I think, you know, it looks much more. I wouldn't use this system as per the rules that are presented on futures. I wouldn't use them on currencies. Stocks, yeah, I could probably delve a little bit deeper into this to see if there's any validity there. Okay, because even with this total win rate here at 37%, I think there's probably enough. You want to check Microsoft. You want to check all these. But I think generally speaking here, there's something here. So, you know, there's a couple of things even as I made this video I'm thinking about. So I could probably bring in the actual P&L here for each one so we could see if there was some validity. So just a first step. It's just the first box ticked as to whether or not we go deeper. So I'll leave that there for Market Cipher B. I've just presented it as the rules that I found were presented. There is many other ways I believe you can use the indicator to trade. However you use them is up to you. This has just been an educational and educational example of one way you could do it, but it is only an example. So what do you think? Should I go ahead and make a new playlist and just grab as many of these strategies as I can find and just test them out? Let me know in the comments if you think that would be a good idea, if that is something you're interested in. But for right now, I'm just going to leave it there. So thanks very much for watching. If you did like this video, don't forget to hit like and subscribe, and I'll see you next time. Bye for now.